All right, so we'll be doing bills of exchange today, right?
Yeah, that's right.
Any problems so far?
Fine.
No?
No.
No, so but yeah, again, nothing much, but yeah, again, accounts receivable, I have to go through it a little bit, that's it. And then I'll let you know by tomorrow.
Okay, fine. First of all, let's discuss the topic, what exactly it is. Whenever you say bills of exchange, we are dealing with promissory notes. This is the other name given to it. It's a promise to pay. In future on a, first of all, certain date, a certain amount of money and if failed to elicit the same, legal actions could be initiated.
Okay.
So what happens? Business is, sometimes you're going through, low demand or something, or maybe some good customers are there with you. They're asking some goods on credit. So you are able to give that on credit, but basically you want some security to be there. That security is your promissory note or bill of exchange. That security can be in the form of PDC, that's post dated check. It could be a bank guarantee, or any format of notes, any other type of notes that is being accepted in your legal or the local country. Okay, what
Okay.
happens later? Say today you made the sales. The promise to pay is after 40 days. Means in 40 days, your customer is going to pay you money. Okay, you can't wait until 40 days, as your working capital will be blocked for 40 days if you wait. Making sense so far?
Yeah.
If you wait for 40 days, your capital will be blocked for that point of time. So you have taken some XYZ bank and applied for what? Discounting. What is this discounting? Discounting means selling your bill received from your customer on a lower rate. Okay, with some third party, some banks, some other financial institutions. You will get instant money after deducting discounting charges.
Okay.
Okay, say your sales was of $50,000. Okay, and discounting charges are there with 10%. Okay, so you will get how much money? 70,000 by 10%. So
77.
you will receive how much?
Six. Okay.
63,000, and your charges would be how much? 7,000.
7,000.
Accumulating. Yeah, go on.
No, nothing. I'm
A
just.
total invoice value of how much? 70 will be considered for the
Mhm.
same. Now tell me, topic is making sense to you?
Yes.
Right. Yes, sir.
After 40 days, bank receive, not your bank. Which bank? Discounting bank. The
Correct.
bank which have discounted the bill because he have got the bill rights now. So he will receive 70,000 from your customer and enjoys a profit of 7,000 rupees. $7,000 or rupees, whatever it is. All right.
Right.
Want me to recap that? Are you good?
That's okay, sir. Got it. Yeah, I'm good, sir. Got it.
Acha, I have to take it as 70. 70 was the initial value. Got the bill worth 70,000. A 10% discounting charge is applicable if I sell that bill to get the instant money. So what I did, I have discounted that at 63,000 and 7,000 is the bill of discounting bank. So we are going to receive 63 and loss of 7,000 will occur as bank discounting charges. So once the bank receives the money, until that the liability will be on our head. So once the bank receives complete money and they are going to intimate us, once you have got intimated, then you can reverse the liability. This is the procedure. This procedure is having 4 steps. First, sales. So FB 70, that is your customer invoice. Then bills of exchange payment. This will be facilitated by F-36. Third step will apply for discounting. So F-33. And once the process gets completed, then the fourth step gonna come, that is called as reversal of liability. This is called F-20 and then the process gets completed. Okay.
Okay.
Now next part, accounts required for the same. Again it is going to be a special GL transaction. What? We did that earlier also, right? In
Yeah.
case of down payment.
Mm.
Remember? First of all, bills of exchange is GL account, a special GL account. This is gonna called as maybe one account in the current asset series. So we'll create something 2030. In which series? Current asset. Second, we will need a bank account that we have already. 2010. Third, customer GL 2200 and 2210. These two are also with us. Customer general and customer one time, right?
Yeah.
Yes.
Next is bank charges account. This is gonna be an expense. We'll create something 4005 or 6. If we have already, we will use the same. If not, then we'll create one. And then bank discounting account. This is going to be something called as 1030. We'll create that in the current liability series. What? Current liability as a bank account. This is also a bank account, but on the liability side, not on the asset side. So let's go and the company code is TAD1. Admin, repair, maintenance, bank charges. We have 4006. This is
Yes.
4006 in our. Now see, these three accounts we have it already. What else we have to create? First account, bills of exchange account. This account will be similar to customer. You know what? It will be a reconciliation account. Okay. This one will be similar to bank, and other three we have it already. We know how to create them. So first of all, create the first one, bills of exchange account. Mark it as 2030. If you want, you can series also, but that will not be meaningful. So it's better to create in current asset, because how much time you are going to wait? 6 months, a year maximum. So generally it comes in the current asset. If you have a bills of exchange over the period of 1 year, you can choose long-term bills payable, maybe in the fixed asset series. So generally we keep it in the current asset series. So click on create. Account group name is what? Current asset, balance sheet account. Say it as bills of exchange. SGL means a special GL account. Done. Control data, line item display, sort key 001, and as I said, it is going to be similar to customer account. So reconciliation account for account type will be as customer. This is the main thing. Then G0 and 67, because we are marking each and every reconciliation account as 67. Another account we have to create is 1030 in the liability series. This will be the discounting bank. Create. Make this account as G009, bank account with obligatory due date. Mark it as post automatically only. Again, it will be open line item management and open item management as well, because until the bank gives us intimation that they have got the money from your customer, this account will kept as open. Type description, say it as current liability balance sheet account, and say it as bank discounting account, and save it. So you have got all the accounts here. Now, what else you do? You have to go to SPRO here, then SAP reference IMG. Remember, this is a banking process, so you have to go to bank accounting and financial accounting. Here, bank accounting. Open it. Then go to business transactions. Open it again. Click on bill of exchange transaction. What are you trying to enter? Receivable or payable? You're trying to do it in the receivable mode. So open it. Two things you have to do: post bill of exchange receivable and present bill of exchange receivable at bank. T codes, if you want to see, you have to do it like this. Wait for a while. Open post first. OBYN, OBYH, and OBYK. Three are there. You have to maintain three of the steps in the account assignment sections. First assignment that you have to do is OBYN. Second, OBYK or H. What was there? N and H, and then K. OBYH. And then the third step is OBYN. OBYK, sorry. Let's see. First of all, and where is OBYK? Open it. That's here. You see? 1, 2, and 3. These three things you have to do. OBYH first, then N, then H, and then K. Okay? Click on define alternative reconciliation. Alternative. Normal reconciliation is 2200 and 2210. Instead of that, we have to define an alternative reconciliation. That's bills of exchange account 2030. So click on execute.
Okay.
W is the type for bill of exchange receivable here. So double click on W. Provide the chart of account. Normal recon accounts are what? Normal reconciliation for customer are 2200 and 2210. Check it out. 2200 and 2210, right? And instead of that, you are going to use which account? 2030. This one. This will be the replacement account for these two. Any questions?
Not so far.
Then use 2210 and maintain the alternative account, that's 2030. In the planning level, use FW. FW stands for FI bill of exchange. FW, just for indication that it's a bills of exchange transactions. FW and save it. Done. OBYN is done. Then go to OBYH. Here, over the top only you will find bank discounting charges. This account is going to be used for maintaining the discounting charges. Double click, provide your chart of accounts, and here mention 4006, I guess. The expense account, charges are your expenditure. So select 4006 bank discounting charges and save it. Second part is done. OBY H, and finally close the post bill of exchange receivable and open present bill of exchange receivable at bank, and here define bank sub account. Chart of account is T81. Bank account number you have is 2010. Why you are doing this? For the purpose of discounting the bills. A special GL transaction using is W. Normal customer reconciliation account is 2200, and you're going to use the alternative bank as 1030. That's your discounting account. Similar here, T81, normal bank, discounting, W2210, If you have 5 more reconciliations, so you'll use the same thing 5 more times. So it depends on these two. If you have 5 reconciliation accounts, you'll use 5 accounts here. That's what I mean. Rest of the details are similar. Now, your configuration part is done. Switching you back to the procedure. First step is selling of goods. So sales you can do from main window, accounting, financial accounting, accounts receivable, document entry, NFB 70, maintain invoice. Select any of the customers, say Microtech 280917, given Jill account, okay, sales account, how much amount? Say 100,000. Put the same here at the bottom line. This is a normal invoice, the way we do. So invoice has been raised like this, okay?
Yeah, okay.
Second step is, generally you receive payment from F-28, but here you are not getting money. What are you getting then? You are getting a bill. Generally, if you are receiving money, you do it through F-28, right? But here there is no money. So if no money is there, there is a bill. So you have to go to bill of exchange. Open it, and you have to clear the payment. Why payment clearing is required? Because you are not receiving money here. You have to enter the bill. And why you can't keep it open? Because we have a closing every month. So before the ending of the month, we have to close the accounts. And if you don't want to apply for discounting, nothing extra needs to be done. You can just maintain the payment and do the reversal, it will be done. But if you want to do the discounting, I mean you want to sell your bill, so in that case it is necessary that you clear that account first in your accounts. So for receiving payment through bill, you have to use F-36 280917. Date. Here select the customer in which you want to do the bills receiving thing. Go to Microtech, hit enter, put the amount and how much? 100,000. Generally it used to be a future date like 40 days, 50 days, 3 months, 6 months, okay? But since we are going to clear it right away, so we'll put the current date only. In the planned uses, put discounting. After giving all these details, go to the top, click on choose open item. Due date is in 27, I mean 28. Click on choose open item, then click on process open item, and see you have a invoice of 100,000 there, DR type. Just you have to clear this. See here. If you see more items, just deactivate them like this. Keep the one that you want to settle against the bill. So I want this one to be settled against the bill. So I'll simply choose it and pay it. How to find out this is a bills of exchange transaction? You will find there is a character attached with the posting key 9W, right? W stands for bill of exchange. Where is W? Here it is. STUV W. Bill of exchange receivable. Okay. So second step is done. I mean we have cleared the item. Now what you want to do? You want to apply for discounting. How discounting can be applied? Go to AR, document entry, bill of exchange, and then after discounting, after payment, you have to go for discounting. So double click on F-36, 280917 is the date. Which bank account? So 2010. Since you're given the bank account, so give a value date also. Come down. Here, 100,000 is the total bill value. So 10% discounting rate is applicable. In that case, you are going to receive how much? 90, and 10,000 will be posted as what? Charges, discounting charges, right? So mention them separately here, 90 and 10. total accumulates 100,000. Then after, check the payment document number. It was 14,002. This document, what you receive after doing the FDS36 payment. If you don't remember, you can go to FBL5N, choose the customer in which the bill is due, all items, and execute. You can find this very easily over here. You see how to find out. So on the digit type, just display it and you will find there's a W here, right? So this one you have to find out. 14,002 is there, or maybe while entering the payment, memorize this number. Okay, so 14,002, you have to put this document number here, select bill of exchange, put 14,002 here, and then hit enter. At the bottom, you will see a message 100,000 USD and bill of exchange 100,000. Bank and bill of exchange posting should be matching here. These two amounts should not vary. If it is matched, then you're good. You can simply go to simulate and see. You are getting 90,000 in your Bank of America account. 100,000 is the invoice value that's being considered, and 10,000 is getting posted as a expense into the bank charges account and posted. So what happened? Bank have given you instant 90,000, 10,000 they have deducted and kept with them, and they are going to receive a bill of total 100,000 from your customer. Now the authority of receiving payment is with whom? Bank. So they are going to receive that money after 1 day, 40 days, whatever is the time limit in between due date, according to due date. But until then, your two accounts will be kept as open. Check GL account display, FBL3N, GL account balance display. It's not APAR, it's GL, okay? Check two accounts, 1030. You will find this account is open. You see, red means open. Check another account. Which one? A special GL 2030. This account will be also open with the same amount. You see? 100,000.
Yeah.
But once the liability will be reversed, liability reversal means what? That bank have received the money. They are going to intimate you. So go to doc entry, bill of exchange, and F-20. Reverse liability. Open it. Put the date 28/09/17. Come down. Here put your special GL account. That is 2030. Uses was what? Discounting. Due by 28/09/17. And here put the customer. Microtech, and then hit enter. This screen gonna come in front of you. Simply post it. Then go to document and display, and you will find one entry is getting posted to 1000300. That's your customer, but there's a W over here. So 2210 is not being used. Instead of that, 2030 is getting used here. So this entry is going to a special GL account to
Okay.
bank. When you check the GL balances this time, list and refresh C. There's no open item now. Means the items has been cleared. See, cleared. It was red couple of minutes ago. Now it is
Right.
cleared.
Right.
This is what? To 2030.
Yeah.
Check 1030. Check it out. This is also clear now. Nothing is open. Means everything got cleared out. Okay. So recap. Sales we made. Then we did receive the payment through F-36, not payment, a note. Then after we applied for discounting, 10% gone to bank and 90 we received. Then finally, when the bank have got the receive of money, then we have reversed the liability, and this is how the procedure got completed. Any question?
Okay. No,
Let's go to
sir.
topic. No questions? The topic is finished. The very next topic gonna come is tax on sale purchases and withholding taxes. These topics are big. Plus, little bit of innovation will be used over here. Plus, you should be having at least idea of what are the different types of taxes trending in your area. Taxes mean when you purchase something for your particular use, then you are going to be a end consumer. Means if you are buying an iPhone for using, you are liable for paying all the taxes so far.
Okay.
Okay. But if you are buying an iPhone for selling it further into the market, you are paying input taxes while buying, and when you will sell it to your customer, you are going to receive output taxes.
Thanks. Okay.
Getting me?
Mhm.
Yeah. Yes, sir.
So basically, this is the idea what you have to understand over here, and basically these are the things you have to understand before we can go further with the topic. So make sure that you guys are having at least idea of all these things
Sure.
before we can
Sure. Yes, sir.
start.
So I just want to know, is there any separate, like, again, document link for accounts receivable and all that that's coming all, I mean, Dunning program and all that as well?
That's inside that only. You check class material, AR,
Right.
and
Mm-hmm.
inside it here only. Bill of exchange, dunning. You see.
Okay. Yeah. Mm-hmm.
Yeah.
Next
Right.
topic
Okay.
gonna be your taxes that is inside here itself
Mm-hmm. Okay.
in the AP only. Okay. So we are almost done with AR and AP leaving taxes. Tomorrow we'll attempt the taxes. If you have any problem, do discuss it right now, or we will start taxes tomorrow. Tell me.
Yes.
It will take a whole hour.
So I'll probably just like practice it and then probably let you know by
When,
tomorrow
when,
if
when,
I have any
when,
problems.
when that time
Sorry?
gonna come, Anirudh? When that time gonna
Sir,
come?
by
You're telling
by
it from
tomorrow, sir.
last whole week.
Sir, by tomorrow, sir.
Guys,
I know, I just
that is not
sir,
that
by
way,
tomorrow.
Yeah, please.
Yeah.
Tomorrow I don't want
Yeah.
to listen the same thing, huh? Venkat, you're
Yeah.
practicing? Hello?
Yeah. I'm here.
You're practicing that?
Not yet.
Can you
Actually,
tell me when that
I'm working
happy
on
day
that.
gonna
No,
start?
no, today itself.
Yeah, please, because the syllabus will kill you.
Yeah, yeah,
Trust me.
definitely. Yeah, it's all almost.
Now onwards, two classes in taxes, one
Mhm.
in asset accounting. And when you talk about asset accounting, this is mind blowing. Let me
Okay.
tell you.
Yeah, yeah.
This is the
Okay.
biggest topic so far. So please,
Yeah.
huh?
Yeah.
Yeah. Yes. Sure. Sure. I'll tell you
I
about
have
tomorrow.
time, I can do that, but the topic, but it will be too much for you for today. This topic
Okay.
is a bit too
Okay.
special.
Mm-hmm.
So
Okay.
please go through that, huh?
Yeah, okay. Thank you.
Yes. Yes. Yes.
Thanks.
Okay, dear.
Have a
Bye
good day.
bye.
Yeah, bye bye.
Yes.